Did you know that over 90% of beginner traders lose money because they don't have a clear plan? That's the harsh truth. But here's the good news. With the right strategy, you can flip those odds in your favor. In this video, I'm breaking down the essential trading strategies you need to know, no matter your experience level. From spotting trends to reading patterns, I'll guide you through the tools and methods that real traders use to stay ahead. Let's dive in and take the mystery out of trading. Fibonacci Retracements. Let's start with Fibonacci Retracements, a handy tool for finding key levels where prices might bounce. It's simple. This tool creates horizontal lines based on special Fibonacci numbers. You pick 2 points, like the lowest and highest price on a chart, and let the tool draw the lines. The key is watching how the price reacts to these levels, especially the 0.382 level. This is where prices often reverse. If the price pulls back to this point, it could be a great spot to buy. Of course, other levels work too, but it's always best to combine this tool with other signals for a stronger setup. Breakout Patterns. Breakout patterns are all about big price moves after a period of calm. Imagine prices moving sideways in a tight range. Then, out of nowhere, they shoot up or down. That's a breakout. There are common patterns traders look for, like wedges, triangles, and rectangles. These shapes on the chart can hint at where the breakout might happen. For example, if the price is stuck in a wedge, a sharp move outside it often signals the breakout direction. To trade this, many traders wait for confirmation, a clear move beyond the pattern, before jumping in. It's exciting but risky, so always keep an eye on the bigger picture. Hold on! First off, thank you for sticking with the video. You've just taken a major step toward making your trading dreams a reality. If you're tired of juggling through multiple indicators and doing all the analysis yourself, only to lose big in the end, let me introduce you to BitsTurtle AI Bot. I've spent over a year perfecting this crypto trading bot, and I'm confident it will revolutionize the way you trade. Sick of manual trading and watching your hard-earned money slip away? You're just one click away from transforming your trading journey and living on autopilot. Grab the BitsTurtle AI Bot from the description below. Reversal patterns. Reversals happen when prices suddenly change direction, going against the current trend. These are great opportunities if you know what to look for. Traders watch for specific shapes like double tops, triple tops, and head and shoulders patterns. Each one signals a possible shift in momentum. For instance, a double top shows prices hitting the same high twice, but failing to go higher. That's often a sign the trend might reverse downward. These patterns don't just appear randomly, they tell a story of market pressure and hesitation. By spotting these early, traders can plan their entries and exits carefully. Elliot Wave Theory. Elliot Wave Theory is all about market rhythm. It says prices move in 5 waves during a trend, followed by 3 waves in the opposite direction. These waves tell us where the market is likely heading next. The tricky part is spotting and labeling the waves. Wave 1 starts the move, Wave 2 pulls back, and Wave 3 is usually the strongest push forward. Waves 4 and 5 complete the trend. Then comes the reversal with waves A, B, and C. There are rules too. For example, Wave 2 can't pull back more than Wave 1, and Wave 3 has to be the longest. Using this with Fibonacci retracements like the 0.618 level for Wave 2 helps confirm setups. Fair value gaps. Fair value gaps are all about spotting price imbalances. Imagine the market making a big move so fast that prices skip certain levels. These gaps are areas where buyers or sellers didn't get a chance to trade. Traders believe the price often revisits these gaps to fill them before continuing its direction. For example, if a gap is left after a sudden rise, the price might dip back into that area before going up again. These gaps are easy to spot on charts, especially during fast market movements. Candlestick Patterns. Candlestick patterns are like the language of charts. Each candle shows a battle between buyers and sellers, with its body and wicks telling the story. There are single candles like doji, which means indecision, and hammer and shooting star, often seen at reversals. Then, there are multi-candle patterns like the engulfing candle, where one candle fully covers the previous one. That's a strong signal of a possible trend shift. Traders love candlestick patterns because they're easy to spot and packed with information. A bullish engulfing at support, for example, is a common buy signal, but always combine these patterns with other tools for better results. Heikin-Ashi Charts. Heikin-Ashi charts are like regular candlestick charts, but smoother. Instead of showing every tiny market move, they average the data to create cleaner trends. The red and green candles here are more consistent, making it easier to spot trends without too much noise. For instance, long green candles with no wicks below often mean a strong uptrend. These charts are great for trend-following strategies because they filter out small price swings. But remember, they lag behind real prices a bit, so they're best used with other tools. Moon phases in trading. Yes, you heard that right. Moon phases. Some traders believe the moon cycles affect market behavior. The idea comes from studies suggesting human emotions and decisions might be tied to lunar cycles. For example, the new moon is often linked to optimism and potential price rises, while the full moon might signal hesitation or declines. It's definitely not a mainstream strategy, but some traders swear by it. Renko Charts. Renko charts are different from regular charts because they focus on price movements, not time. Instead of showing every tiny change, they use bricks to represent price changes of a set amount. If the price rises or falls by that amount, a new brick is added, green for upward moves and red for downward. These charts are super helpful for spotting clear trends and avoiding noise from small price changes. Harmonic Patterns. Harmonic patterns are fascinating because they use math and shapes to predict price moves. They're based on Fibonacci ratios and show up as patterns like the bat, butterfly, or Gartley. Each one has specific measurements, making them precise but tricky to spot. For example, the Gartley pattern looks like a zigzag and often shows up during corrections. Traders use these patterns to find areas where the price might reverse. The key is identifying the PRZ, or potential reversal zone, where price action aligns with Fibonacci levels. Support and resistance. Support and resistance are the basics of trading. Support is like a price floor, where buyers step in, and resistance is like a ceiling where sellers take over. For example, if the market keeps bouncing back up, that's a support level. If it struggles to go past, that's resistance. These levels are key for finding entry and exit points. Support and resistance are more than just lines. They show where the market reacts. When a support level breaks, it can turn into resistance, and vice versa. Trend lines. Trend lines are simple but effective tools for understanding price direction. Draw a line connecting lower highs in an uptrend or higher lows in a downtrend, and you'll see the market's path. These lines act as guides for traders. If the price stays above the trend line, it signifies a strong trend, but if it breaks below, it might mean the trend is reversing. Trend lines also help set targets and stop-loss levels, making them versatile tools. Gann Angles. Gann Angles are based on geometry and time. They use angled lines to predict support and resistance areas. The 1x1 line, where price and time move equally, is the most popular. Traders watch for price reactions along these angles. For example, if the price stays above the 1x1 angle, it's considered bullish. If it dips below, it might signal bearish trends. While Gann Angles need some practice to draw, they offer unique insights into market behavior. Momentum indicators. Momentum indicators measure the speed of price changes, helping traders catch trends early or spot when they're slowing down. Popular examples are the RSI, Relative Strength Index, and MACD, Moving Average Convergence Divergence. RSI shows if a market is overbought above 70 or oversold below 30. For instance, if RSI hits 80, it might signal a pullback soon. MACD, on the other hand, uses two moving averages to show trend direction and strength. These indicators are handy for confirming trades. For example, if a stock breaks resistance and RSI supports the move, it's a stronger signal. But they're not perfect. Using them with other tools improves accuracy. Oscillators. Oscillators are tools that swing between two levels to show if a market is overbought or oversold. Popular ones include the Stochastic Oscillator and RSI, Relative Strength Index. These are great for spotting potential reversals. For example, if an oscillator hits its upper limit, it might signal a price drop is coming. Similarly, when it hits the lower limit, it could hint at a price increase. Divergences. Divergences happen when a price and an indicator move in opposite directions. They can signal a trend change. For example, if the price makes a new high but the RSI doesn't, that's a bearish divergence. It hints the trend might reverse downward. On the other hand, if the price drops to a new low, but the RSI rises, it's a bullish divergence, suggesting a price increase. Divergences are powerful tools to anticipate market reversals. Supply and demand zones. Supply and demand zones highlight where prices are likely to reverse. A supply zone forms when sellers dominate, and a demand zone forms when buyers step in. For example, if the price consistently drops from a certain level, that's a supply zone. Similarly, a level where prices keep bouncing up is a demand zone. These zones help traders spot entry and exit points. Thanks for sticking with me till the end. If today's insights on crypto trading strategies grabbed your attention, you're in for something big. Right here on your screen is the next video, packed with techniques to 10x your trading profits. I've got a feeling it's exactly what you need to level up your game. Go ahead, click, and start boosting your gains.